If you see the financial market as a random red and green candle, you're setting up yourself to fail. Many people lose money because they treat every single asset class like they are the same. They apply a crypto strategy to the foreign exchange market, or they trade stocks like they are betting on a sports game. The global financial markets are split into three completely different playgrounds, each with their own set of players, their own set of rules, their own set of risks. If you want to stay profitable in this business, you need to understand what you are actually stepping into. Now, let's break down the big three. First up, let's talk about stocks. When you buy a share of a stock, you are not just buying a ticker symbol. You are buying a literal piece of ownership in a real world business. So if that company innovates, hires the right people, increases their quarterly profits, the value of your share goes up. And there are some established companies that are going to pay you a slice of this profit directly in the form of dividends. The players here are institutional investors, pension funds, individuals that are looking to build consistent cash flow, or those that are looking to build retirement portfolios. It is a market driven by fundamentals. We talk about interest rates, corporate earnings, and consumer demand. It is lower than crypto, but it is the literal bedrock when it comes to building long-term wealth. Now, let's contrast that with the second market, crypto. This is the 24/7 digital Wild West. Unlike stocks, crypto doesn't sleep. It doesn't wait for a closing bell, and you aren't buying a traditional business. You are trading technology, network utility, and let's be honest, pure community sentiment and market liquidity. But because it is younger and less regulated, there is an unmatched amount of market volatility. This is where you can see a massive upside in profit in a matter of days. But if you don't have an airtight risk management strategy, your account can get wiped out also in a matter of days, because this is a market, a high velocity market that is dominated by retail hypes and whale investors. Finally, we have the heavyweight champion of the financial world, FOREX, or the foreign exchange markets. This isn't about companies or buying tokens. You are trading the relative economic strength of entire nations. Now, think US dollar against the euro, or British pounds against the Japanese yen, or even US dollar against the Nigerian naira. The players here aren't just retail traders in their bedrooms. They are central banks, they are big or commercial mega banks, multinational corporations moving money and capital across borders, and so on and so forth. Forex is the largest and the most liquid financial market on earth. It clears over $7 trillion every single day. And because it's so massive, it is very difficult for a single entity to be able to manipulate it. It runs on macroeconomic data like interest rates, central bank policies, geopolitical shifts and tension, and so on. So here's your blueprint. Stocks are for long-term growth and stability. Crypto is for high reward coming from high risk, while Forex is for deep, liquid, and strategic day trading. You don't need to actually learn the three. You only need to pick the one that suits you as a person and that suits your capital and also your risk tolerance. If you have learned something from this video, do well to like, share, and at the same time comment by letting me know which of these three markets you are interested in or you are currently trading. And for people who are interested in learning how to go about managing their risks in these three financial market environments, drop a comment and I'm going to attend to you. See you in the next video. Bye.